If you're a foreign investor with U.S. rental property, you know location is key. But what's even more important is your tax strategy. Today, we're going to break down how one simple 9-digit number can totally transform your investment returns. And we'll start with a number you absolutely want to avoid: 30%. This number is really where our story begins. It's the default amount the IRS tells your property manager to withhold from your rent. Why? Well, it's just harder for them to collect taxes from non-residents, so this is their way of making sure they get paid first. But here's the kicker. This isn't 30% of your profit. No, not even close. You see, that 30% is taken from your gross rental income. That's every single dollar you collect before you've paid the mortgage, the insurance, property taxes, or that unexpected plumbing bill. It's a massive cash flow drain that can seriously cripple an investment right from the start. So how does this even happen? Well, it all starts with this one form, the W-8BEN. As a foreign investor, you give this to your property manager or whoever is handling the money to certify that you're not a U.S. person. It's a totally standard and necessary step, but it's also the exact trigger that activates this default 30% withholding. And look, this isn't some hidden, obscure rule. It's written right there in black and white in the IRS instructions. Rents are explicitly listed as income that's subject to this flat 30% tax. The whole system is basically designed to withhold first and ask questions later. But what if you could change the rules of the game? Okay, so let's shift from the problem to the solution, because there's this really powerful provision in the US tax code that lets you make a strategic choice, an election that completely changes how your rental income gets treated. The key concept you need to know is effectively connected income, or ECI for short. Now, this is income that's considered connected to a US trade or business. And typically, rental income is seen as passive investment income, not business income. But here's where the tax code gives you a really unique power. This power comes from Section 871D of the Internal Revenue Code. This election lets you voluntarily choose to treat your real estate income as if it were effectively connected income. You are literally actively opting into a different and a much, much better tax system. And the result of making that choice? It's dramatic. On the default path, you get hit with that 30% tax on your gross rent, period. But by making the ECI election, you switch over to being taxed at the standard US graduated rates on your net income. That's your rent after you deduct all your operating expenses. For your bottom line, the difference is night and day. So how do you actually get on to this much better tax path? I mean, you can't just call up your property manager and tell them you've made the election. You need a procedural key, and that key is a specific US taxpayer ID number. Which brings us to the most critical, practical question of all. It's a great strategy on paper, for sure, but how do you actually do it? How do you make this election official? The election is formally made by filing a U.S. tax return. Specifically, it's the Form 1040-NR, which is for non-residents. On this return, you'll list your rental income and, crucially, all your deductions, and you'll calculate your tax on the net profit. The very act of filing this return is how you make the election official. Right, but to file that 1040-NR, you need an identifying number. Since you're a foreign national and not eligible for a social security number, the IRS issues something called an Individual Taxpayer Identification Number, or an ITIN. It's a 9-digit number, and its only purpose is for federal tax reporting. It's important to note it doesn't give you work authorization or change your immigration status. It is purely a tool for tax compliance and, as we're seeing, tax strategy. Okay, so let's put all these different pieces together now. Understanding how these forms actually flow and interact with each other is absolutely key to making this strategy work correctly. So here's how the sequence works. First, the W-8BEN establishes your foreign status and kicks in that 30% default. To override it, you have to file a 1040-NR to make the ECI election. But to even file the 1040-NR, you first need an ITIN, which you apply for using Form W-7. See how it works? Each form unlocks the next step in the chain. Now, here's where it gets a little tricky. A classic bureaucratic catch-22. The instructions for Form W-7, the application for the ITN, say that you generally have to submit it with a completed tax return. But wait a minute, how can you file a return if you don't have the ITN yet? This is where a really crucial and not so obvious piece of information comes into play. The key is that the IRS actually provides specific exceptions to this rule. And for real estate investors, there's a huge one, an exception that lets you apply for an ITIN before filing your first tax return simply because you're receiving rental income. This is what lets you break that bureaucratic loop and get the whole process started proactively. And you know, the strategic importance of this ITIN goes way beyond just your annual rental income. It's actually essential for the entire life cycle of your investment, especially when you get to that final, most profitable step, selling the property. See, when a foreign person sells U.S. real estate, a whole other withholding law kicks in. It's called FIRPTA. This law generally requires the buyer of your property to withhold 15% of the gross sales price and send it straight to the IRS, just to make sure any potential capital gains taxes get paid. And here we go again. Your ITIN is your most essential tool. You need it to file the tax return that reports the sale and to pay whatever tax is actually due. But even more importantly, you need an ITIN to apply for a withholding certificate using Form 8288-B. This can actually reduce or even completely eliminate that mandatory 15% withholding. Without an ITIN, you have way less control over a huge chunk of your money. And beyond all the direct tax stuff, an ITIN can open up other financial doors for you in the US. For instance, some banks will accept an ITIN to open an interest-bearing US bank account, which just makes managing your income and expenses so much easier. Plus, some lenders and brokers use ITINs to help get mortgages for foreign nationals, which could give you access to financing. So, let's wrap this all up. We've gone from a really punishing 30% tax all the way to a sophisticated strategy that covers your investment from the day you buy it to the day you sell it. And right at the center of all of it is this one little 9-digit number. This is really the ultimate takeaway here. You shouldn't look at getting an ITIN as some bureaucratic headache. It is the essential key. It's what unlocks the ECI election, what lets you get taxed on your net income, what gives you control over FIRPTA withholding, and what helps you operate financially in the US. It really transforms you from being a passive investor getting taxed to an active manager of your investment's financial success. So I'll just leave you with this one question to think about for your own portfolio. After understanding these mechanisms, is your ITIN just a tax number? Or is it the key to unlocking and maximizing your entire investment return? I think you know the answer.